Hello everyone, welcome to the InfoVest podcast. My name is Daniel and today is Thursday, December 10th, 2020. And we're just going to go over a few things that is happening in the markets. So just to recap, on Tuesday we had a big rally and the big rally was due to the positive stimulus talks between McConnell and Pelosi. The idea was that McConnell was kind of looking to be more easing his stringent kind of talks and rules that he had initially when it came to drafting the stimulus bill of which is now $908 billion. So there was positive talks that the two were coming together and that the bill would be passed sometime this week. So that's what caused the rally. And then on Wednesday we had in the overnight session we had a gap up in equities, which then kind of consolidated all night. And then as 9:30 a.m. during the North American session, we then had a full sell-off trend day mode, which basically liquidated all and everyone who was long on Tuesday, and basically took them out, and we wiped out the whole move of Tuesday's rally, and that was basically due to a couple of reasons. First, we had a sell-off in the NASDAQ index, which is the technology index. We had few stocks, many of the tech stocks that were down, so that initiated there, then which brought down the other markets, such as the Dow and the S&P 500 and the Russell. Not so much, I would say, wasn't so bad for the Russell and the Dow as it was for NASDAQ and S&P. And this first initiated when there was news coming out on Facebook being sued by U.S. officials on the antitrust laws. And this could progress, and we would have to see as January comes, and when we find out about the U.S. Senate, to see if Democrats are mostly who are going to take majority, or if it's Republican. Right now, the expected is that Republicans will hold majority in the Senate, but if that flips, then you can expect tech stocks like Facebook and Google and other tech stocks to see a little bit of a sell-off because of this antitrust laws. So that's what initiated it, and then followed by McConnell's also comment, where McConnell also mentioned on Wednesday that talks were going okay, but from Pelosi she mentioned talks were going okay, but from McConnell he mentioned that there were a few points that still they're not agreeing on. So to basically pull up McConnell's tweet yesterday, he tweeted the following, so I'll quote him. He said, "Yesterday, Democrats rejected 2 more GOP aid proposals in the space of 2 hours. I proposed we set aside remaining sticking points and pass everything we agree on. They say no. And they now admit they blocked aid all summer and fall because there was upcoming election." So, this is all political mess. And with the tech news plus McConnell mentioning that, it didn't look good first for NASDAQ, and then it trickled down into the S&P and other indices as well. Tesla also had a big down day, was down 7%. So a bank came out, many other banks were saying that Tesla was overvalued and overextended, and I don't disagree with that. Tesla did have a big run up So that was also pressuring many of the tech stocks, as well as the Nasdaq index, as it did come off, and same with the S&P 500. And there were also 2 reports of people getting allergies from Pfizer's vaccine. So, now you've got the press pushing out after UK vaccinating some of their citizens. You have the press pushing out certain news that there are people who are getting allergies. So you kind of can expect that to come out, especially when most of the vaccine is expected to roll out. And then, it's all about differentiating between the facts and the noise. So this right now, the allergies news that came out right now, it's noise. You just have to monitor it. If it becomes to a point where and the press will do this, where someone dies due to the vaccine, and you get a trickle effect of more people dying due to the vaccine, you can kind of expect a knee-jerk down in equities. So just kind of keep an eye on that, but know also that the press will push what basically sells for them. So other than that, now when we look at the current session for today in equities, we see that overnight, if I look at here the S&P 500, in the overnight session we did again kind of consolidate. There wasn't much big movement, but as around 2 a.m. As the European session started to open, we had kind of a rally up until 4 a.m. and then a slowdown in the rally after around 5 a.m. And now how things are looking right now in equities, we do see kind of a sell-off back to the lows of the session for today, and actually making new lows of the session. And we touched here. So here's the thing for today. We touched kind of the level of, in the S&P, 3,661. And that's kind of close to the lows of yesterday's session. So you kind of want to monitor that for today, going in for today, that if we can hold this level, then we could either, one, get a balanced day where we're just consolidating, and if that's the case, we could later, eventually, either late in the day or the next following session, get a breakout either on the downside or the upside, depending on where the market takes us. Now, if we have kind of a headline or some sort of positive macro news that comes out, that will steam the breakout, and that will push equities higher. If you start getting negative news regarding about the stimulus talks or anything about the vaccine, we could break this level of 3660 in the S&P 500. And if we do that, a level that I want to start monitoring is a level of 3633 in the S&P 500 to around, let's say, in the range of, I'd say 36, close to 3600, so 3607, around there. That's the range if we get again a breakout mode to the downside. I feel that that's the next level to watch as support, and that new level that I was mentioning about 3660, that ends up being resistant. So those two levels you just want to take a look at on the S&P 500, and you can use that to map also the SPY ETF. So that's something to look out for. Another thing is key events. We have the FDA. They're meeting to discuss the vaccine made by Pfizer and BioNTech today. And we have jobless claims data that's due in the U.S. also at 8:30 a.m. And we just had the ECB statement, which I'll talk about soon, at 7:45 a.m. Eastern Time. And we have the ECB conference at 8:30 a.m. So that conference is very important, as the ECB will talk about and answer questions and talk about possibly key issues regarding about the euro and the plan for QE. So since we're on the topic of Europe, let's kind of just dive into it. We had a pop in kind of the euro as we speak. We were at the 120 handle, and we popped up to above the 121 handle. We're seeing kind of right now a little bit of sell-off, tiny sell-off. It's not so big. We also seeing treasuries kind of the yields spike up and the prices dipping on the European ECB statement. So just to sum up the European ECB statement, kind of expected. I mean, it's great. They're pumping and continuing with QE, which is good news, but the numbers are expected, are basically in line with the base case scenario. So ECB leaves the rates unchanged. They expand the PEP by 500 billion euros until March 22. So the deposit facility rate remains unchanged at negative 0.5%. Same with main refinancing rate of 0% and marginal lending facility at 0.25%. They extend the window for the lowest rate on TLTROs. So basically that's the targeting long-term refinancing operations. That's how the central bank, ECB, offers multiple year loans to the big banks to keep the system liquid so that it will pass on to the citizens, to their pockets. That is extended, and they raise the total amount that counterparties will be entitled to borrow the TLTROs. So they raise it from 50% to 55% of their stock of eligible loans, and they extended the duration of April collateral easing to June 2022. So that's the asset purchase program. And so QE continues to stay at pace at 20 billion euros per month. There were some talks that, you could get 40 billion. Again, the 500 billion and the 20 billion was expected. So not much of a surprise there. If we did get something bigger, like more than 500 billion, so for example 600 billion, and then 40 billion per month of QE, then for sure you would see that would be a big dovish sign for the euro, and you could see it come off. But that didn't happen. We're still in line. So the repo and swap lines with non-euro area central banks, they extended until March 2022. The policy measures taken today will contribute to preserving favorable financing conditions over the pandemic period. Uncertainty remains high, including with regard to dynamics of the pandemic and timing of vaccine rollouts. We also had a little bit of a headline where the ECB mentioned that they will continue to monitor the exchange rate developments. So if you heard my previous podcast, I mentioned about this euro. This euro is something to look out for at the 8:30 a.m. ECB conference. For sure, ECB will be asked about the euro and what they expect. So as we already heard from this headline that they'll continue to monitor the exchange rate developments, but they didn't say explicitly that, this is damaging or affecting the growth of Europe and the inflation rate. So if they do say that in the ECB meeting and they do target it, then you can see the euro for sure sell off based on that comment. If they say, the same rhetoric that they'll continue to monitor, I mean, that's the base case, it's expected. And then if you see that they say that they don't care about the euro and they're not targeting the exchange rate, then you can see for sure a huge rally in the euro. And that will keep it strong. Very unlikely they'll say that because ECB's main target is to keep inflation at 2%, to raise it to 2%. And that's not happening, and it will be very difficult if you have a strong euro to see inflation rise. It would be wise to keep the euro, not keep it a little bit lower than what it is. So having a strong euro will affect the inflation outlook. So that's something to keep in mind when you go and are listening to the 8:30 a.m. ECB conference. So again, in terms of the PEP stimulus, got a 9-month extension. There was debates of a 6-month to 12-month extension. So you're quite in the sweet spot. There's no other major surprises from the ECB. They'll continue to monitor as the virus and the pandemic continues. And so overall, I mean, the spike in euro, I don't see anything too exciting. Everything is as expected. And I don't see anything that, anything major. As I speak right now, bonds have already retraced back to the P1 level. It's already back of where it sold off, and the euro is coming off right now as we speak. So again, this is all up into the meeting of 8:30 a.m. with ECB Christine Lagarde. So yeah, a few things to note and a few things to watch out. In terms of Treasury, most Treasury yields rose on hopes of more domestic fiscal stimulus, especially yesterday. And then we when we had that sell-off, the yields came off and we had kind of bond prices rising again. So again, it comes down to the rhetoric for today of, because there's not much in terms of the macro data and schedule to come out, other than just the ECB 8:30 a.m. Conference, and then you have just have core CPI U.S. inflation data at 8:30 a.m. and you have 10:30 a.m. natural gas storage, and then everything else is just kind of a quiet day after that. The focus will be on just kind of the macro and the news and the fundamentals of, okay, what is the economy doing? What is, going on with the stimulus? And is there any progress that's going to come out of it? So kind of watch out for developments from McConnell and Pelosi for that. The dollar, on the other hand, has been choppy, especially yesterday, again, according to the U.S. fiscal stimulus, and it started to pick up a bid, and which pushed also gold prices down, and that kind of killed the optimism in gold as They were hoping for some sort of stimulus, and so that didn't happen. So gold was down by 1.69%, and on the futures 1.79%. As of right now, I mean, it's again just consolidating, not much big movement. It's picking up a little bit of a bid in gold at 1842 on the futures, and other than that, the month of December for gold has been continues to be volatile. Remember, precious metal is still up 20% for this year. It was also a good run, but now there are a couple of things that are weighing onto the situation, especially with the Fed meeting that's coming next week. So that will also determine where gold can, go from here. Prices are still up more than 3% in December. Gold is still up more than 20% for the year, making it the best performing asset in 2020. It is off from quite down from the all-time highs. It still remains 10% below the all-time high in August, and it's basically hurt by the broad rally in stocks and riskier commodities with investor anxiety related to the fading of investor anxiety related to the U.S. election. So in order for gold to pick up a bid here, I mean, we're kind of on a downward trending slope. Again, I would point to few things. One is the Federal Reserve next week. Are they going to do more QE, pump more money? Then you can see a fall in the dollar and rise in the gold prices. And also the blue wave. The traders are anticipating that a blue wave scenario with Biden could also push gold prices higher, because then you have, again, talks of stimulus programs and a bigger package of stimulus. So, I mean, again, January, as I mentioned, January 5th, you want to watch out for the Senate, the Georgia runoff. If you get kind of a blue wave, and you kind of have the Senate being controlled by Democrats, then you could get a bid in this in gold prices, because you have the chances of a stronger, bigger, larger stimulus bill. So now we're talking about above $1 trillion, talking about 2 trillion, 3 trillion. So that's according to what Biden has said. What actually happens, we will have to see. So again, key events to look out for. Key events. This could shape the next couple of months to years in many of the asset classes. Other than that, oil. I mean, oil was an interesting one. Huge build in inventories in oil, about 15 million barrels against the expected of a draw of 1.035 million. So we had a huge surprise build in crude, but oil shrugged it off. They continue to shrug off the bad news. And gasoline, during API numbers was a build. Again, build is oversupply of oil, and when I say draw, that's an undersupply. So when the data came out yesterday, it was a massive oversupply for oil. As I mentioned in the previous podcast yesterday, you'll get that big sell-offs, and we did. We got that big sell-off in oil. But what was very interesting was that right away, after a couple of minutes, especially on the gasoline side, we had a pickup in bids. And gasoline started picking up first against crude oil. So as gasoline picked up and went back to the previous price where it sold off from, it continued to push up higher above those levels, and it brought also crude higher as well. And you look at this market. I mean, you have a couple of news which is negative for oil. For example, Libya coming back online and pumping 1.2 million barrels per day. OPEC Plus not delaying the taper and instead adding 500,000 billion barrels per day per month through March, and a raging resurgence of the pandemic sparking new restrictions throughout the developed world. Consistent inventory builds, including yesterday in the U.S., which was the second largest on record. You have all that negative news, and yet you have crude back to where it is, back picking up bids. So, as we speak right now, crude is at 46.23. It picked up all of yesterday and picked up also overnight. The only answer I have to go against all the negative news that I said is just the vaccine news that's being developed, and you have buyers that are coming in. So as soon as we saw those buyers coming in, we knew that there was a shift and there was a change. So this is something to keep an eye on. Yes, you have a strategy. Yes, we mentioned that, okay, it would sell off, and yes, do be careful of profit taking to come back, and which exactly happened. And we're seeing this time and time and time. When I look at crude oil, you are seeing levels, and you're seeing people just traders continuing to buy it back up, to purchase it every time it falls, to purchase it back up. So it's being lifted quite well, and so it's something to keep an eye on. You do have this negative news, but it's something to keep an eye on, because you are getting traders buying up that level, and that level of sell-off was 44.98, and we're all the way back up to 46.25 as we speak. So you're seeing consistent rallying, consistent buy the dip in crude. We could reach to $50 or higher. So that's something to keep an eye on, and something to progress. And again, there is this backwardation that is happening, meaning that you have higher prices now in the current contracts and lower prices in the future contracts. So meaning that traders are pricing in oil prices to be lower in the future, which makes sense. I mean, you get back, demand is back, and then you have everyone pumping again. You can expect that in the future oil prices will be lower than what it is today. I guess what's keeping this afloat right now is that you have the vaccine news that is coming back, and you have demand that is coming back. So the demand that is coming back today is probably lifting and keeping oil prices afloat. On the other side of the trade, you have OPEC that have decided to cap and keep 500,000 barrels per day per month up until March. But you could question that, okay, you have this cap, but there are going to be certain countries that are going to go above it or probably break the rules, and eventually we are leading to more production in the future, just like we saw with Libya coming back online with pumping 1.2 million barrels per day. So for oil today, just note that you have strong buying today. The day the things change, the fundamentals and dynamics of oil's changes will probably be later from now, maybe a couple of months from now, where you have kind of the acceptance that, okay, demand is back, vaccine is back. It's all over with. You have supply increasing. Countries are OPEC and OPEC Plus, and other nations are continuing to pump and pump more. Then you can probably see steady prices, and probably back to contango, or you'll see prices kind of falling lower, as opposed to catching bids every single time. So that's something to look out for. So in other news for individual stocks, you have Oracle Corp is expected to post a rise in second quarter revenue as remote work keeps up demand for its growing cloud business. You have also Costco, the wholesale corp, is expected to post an increase in first quarter profit. And you had DoorDash yesterday, prices rising from the IPO, and a lot of hype on that. U.S. Airlines, mentioned this before, dependent on the COVID-19 relief proposal. They're waiting on progress from Washington that could include another $17 billion into payroll support for the industry. And, if you get the stimulus package and this payroll support, and you get the vaccine back, you still have airline stocks still not where, still kind of being hurt, being affected by this whole pandemic. Still has a long way to go, but when you have headlines like the stimulus package and the payroll that's coming out, that can push airline industry and their stocks much higher than what it is today. Other than that, Canadian dollar is picking up a bit to spot 78. And we have, right now, as I'm looking, we have kind of now sell-off as in the treasuries, and pick up in euro to 1.21 handle, as we are now into the ECB meeting. And last but not least, I'll just quickly touch up on Brexit, on the pound. Overnight session, we had a gap down. It wasn't able to fill that gap, and we continue to see a sell-off in the pound. The biggest thing is, like I mentioned, UK Boris Johnson. They mentioned that they're having a dinner with the EU. And so how that came out, how that dinner came out, was that they're still undecided. They said that, okay, everything is good, progress is going well, but however, we're still not decided on some key issues. And those key issues we will probably resolve over the weekend. So they gave themselves a deadline by the weekend. They hope to get the deal done. Again, you have the news or the noise versus the facts. So, it's a yo-yo. It's a whole yo-yo kind of atmosphere with the pound, because you get positive news and negative news, positive news and negative news. So we're going to have to wait till Sunday, see how things progress in the pound. I wouldn't be surprised if nothing comes out of the Sunday meeting. If it does, we will have a very big relief rally, especially because as we are getting closer to the December 31st deadline, and things are starting to sound, a little bit wary and negative. That's something to kind of keep an eye on. So see how things progress Sunday or Monday. They could push it again. They could say that they still need more time to talk about things. And if it doesn't go through, we could see the pound continuing to sell off. If it does, we'll see a pretty big, huge relief rally. So other than that, I'll let you guys go. Thanks for listening. Hope this helps, and hope you'll join and tune in to the next podcast. Thanks.